everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 9th of February to 9 of 18. Overall, pretty interesting day of movement. Before we get into the charts, as always though, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From here you'll be able to sign up for our email newsletter so that you never miss anything that goes on in there. Inside the newsletter, not just the videos posted, but we also cover a bunch of other things as well, going over different stocks and crypto and anything that's really moving or of interest will show up in that Outlook newsletter. So make sure to sign up for that so you don't miss anything. Along with that, if you haven't done so already, click on the live trade room subscription and trial info. From there, you can sign up for a free 3-day trial in the live trade room so you can hang out with us for a couple days and see what we're all about. It's a really good way to get your feet a little bit wet, kind of see how we trade throughout the day, and see how we approach the markets from our point of view, and, you know, basically just, kind of an inside view, if you will. Now, looking at the charts for today, the euro dipping down and testing major levels of support. Now, major levels of support being the rising channel support coming up, and we also have the 200-period moving average coming into play right around that same area that the previous market held structure as well. So a lot of areas of interest all coming in to the same location. Unsurprisingly, there was a pretty good bullish bounce right there. But in reality, we're not really gaining a whole lot of leg to the upside. If there is a huge amount of buy interest, where are the buyers, right? They're showing up at the low, but then they completely disappear. It makes me a little bit nervous, right? It doesn't give me the warm fuzzies when I'm looking at this thinking, yeah, man, we're going to rocket ship up to the moon. We're not going yet. The buyers just continue to fail to continue pushing the market. They get the nice bounce, but then they disappear. So it leads me to believe that buyers are still anticipating lower prices, and it does kind of make sense. The next area, of course, that we've been talking about is that previous swing low into swing high area, and this creates a zone of interest for long-term traders. So that might just be what the euro is looking for. Now, obviously, I'm not a big fan of shorting directly into support. We have a large level of channel support, moving average support, previous swing support. I'm not a big fan of shorting into that, and any type of selling here is going to be a little bit lower on the probability scale. That said, I really don't have a reason to look long either, so that just tells me that I need to be sitting on hands. The only thing that I'm looking for right now is for the market to want to continue for a little bit more of a drive down to get back into this kind of band down here where we can start looking for some buying opportunities from that. It's not too far away, but for right now, I think it's better just to sit on hands for the euro because, well, it's done everything that we thought it was going to do. Now we just have to wait for it to go just a little bit further to get some of those bigger areas of support, considering the fact that even though it did what we thought it was going to do, now the anticipation that the buyers are going to show up and we're going to go pushing higher, well, where are they? They're just not there. So we'll have to wait for them to join us in the party, otherwise just kind of waiting for a little bit more of a dip lower on euro. On gold, we did come down into that major buy area support. This is a perfect example of what I really wanted to see on the euro. Gold apparently took the notes. Euro missed those notes, but we had a dip down into that major buy support. We have overshot the bottom of that channel to the downside, right into a major area of support. You can see that hold. That hold basically held it within 10 ticks-ish. Very strong bounce off of the bottom. And notice we're actually getting some follow-through. Take notes, euro. You missed the textbook. We have the gold market continuing with a little bit more bullishness. Now, that said, these bull candles aren't exactly the most pristine-looking things in the world, but we do have a very strong bull engulfing bar at the bottom, and they were able to continue on the next candle. So it does show that buyers are at least holding some interest. I'm still not holding my breath that this goes flying right this second, but what I would like to see is the market to come back to retest that previous little swing low they made before that test down for kind of, you can think of it as sort of a mini head and shoulders type of formation like that. That would look a lot better to me, and that would put a price objective, or at least an area of interest at around 13.15 to then shove the market back up. We already have the major buy zone test, and we are seeing a really nice response from there. Next objective for the buyers is going to be at 27.5 on a retest of that big horizontal support and resistance. Final objectives after that, if they are able to get back above that, crack above it, use it as support, and then go right on back towards 1360s to 70s. But until we can start breaking through 27.5, we're going to have to wait for the buyers to show up to the party here as well. We're seeing some signs that they're interested, but I would like a small little pullback in the overnight session to start the job to the upside next up. On crude oil, we have a continuation to the downside, exactly as anticipated, and we are looking for more bearish movement. The one big thing that stands out here is how aggressively this bear drop happened, and when we had that little bit of consolidation, they were able to make a trap high. and then go sinking right back down again. And that left a wide open gap that happens between the previous swing low and that swing high that formed. And that gives us an idea of where the market is likely going to want to continue in terms of objectives. So we can measure that distance. If we take that distance from that low right there to that high that was formed, and we can just take this box and drag it down to the lows of that swing. And guess where we're sitting on top of right now? Yeah, we're sitting on top of that gap area, and this is where a lot of sellers are going to be taking some profit, but we can also see that the sellers are trying to extend this a little bit further, and that does happen sometimes, and that basically means that we're looking for, I need to copy-paste that again a little bit better, we're looking for a deviation type move, and that basically just means doubling of that little box that we measured up, and that would leave the next level of support just around 59.60, and it's hard to ignore the fact that we have major horizontal support at 59.07. So right now it looks like the sellers are going to continue the drive lower. They are definitely here with some strength, complete trapping on the highs, nothing really showing up in terms of potential bearish playing. I mean, the bears definitely mean business right now, and that's not a situation that I would want to play around with. They are not joking around. Another way to measure it would be measuring that drop lower and then utilizing that as a measurement protocol instead, and that would give us roughly around the same area that we are in right now. So either way you cut it, we are in a large profit-taking area right now, but it's hard to ignore the fact that we have that huge support and double-down objectives at around 59.07 to 59.50. So I am anticipating the sellers continuing through the overnight session, maybe a little bit more sideways to down type action like we had last night, but the overall premise still exists. We are very bearish, and we're looking for this to continue down. And then over on the S&P is resuming its bear trend to the downside, or at least attempting to. Again, primary objectives for the S&P is to get back down to these low closes, right? That's the first major objective. Now, I say the low closes because when you have this aggressive of a bear drop, you're going to have sellers who are selling for literally any reason. They don't care what the reason is. If it's a bear bar, they're going to sell it. If it's a bull bar, probably just a dead cat bounce, sell that too. They're going to be selling everything on the way down, and they're not going to wait for a candle to trigger them in and sell below the candles. That they're going to sell as soon as that candle closes, and that's why we're looking for those lows closes, not the overall lows. Now, the overall lows will be a secondary area of interest, but the main idea is we have sellers that sold aggressively here on that little bounce. They sold a little more. Another bear bar, hey, sell that too. Bear bar, sell that too. Bear bar, hey, sell that too. Sell everything. And when it starts bouncing, then they start building their positions, right? That was profitable, all of these were profitable, but this one, that's a little bit of a different story. So they're left holding a bag here, and that means that when it starts bouncing up, their premise hasn't changed, their sentiment is still heavily bearish, and they're going to look to sell on some of these rallies up. First bear bar after a couple bull bars, sell that. Couple bear bars down, sell that too. So they're going to be selling on the way up here, looking for an overall objective back down to get out at their original entry point at break even, so they can make money on the rest of the position and maybe even hold some for a better average that would be floating up here. So the primary objective right now for the S&P is to get down to those low closes, and that's floating right around 25.59 3/4. Of course, if it does want to punch through, we do have the overall lows, which are going to be another area at 29.75. But I personally am looking for a lot of support to come in at around 59 3/4, and that's the area that I am going to be keeping an eye on going into tomorrow's session to see if they can finish it off, maybe even in the overnight. You never know. We might be able to dig down there during the Asian and Australian session, maybe even early morning tomorrow to finish that job. But that's going to do it for the outlook. Overall, we actually have some pretty good movement. The S&P is continuing its bearish trend. We have crude oil, which is still grinding lower with major buy objectives underneath us. A little bit of a magnet there. Gold, gorgeous bounce off of that huge buy zone support. And the euro, a little bit of sitting on hands here just because of the lackluster bull rallying, or lack thereof. Need to see the euro buyers show up to the party before we can jump on board with them. But aside from that, pretty good overall outlook that we're keeping an eye on going into tomorrow's trading session to finish off the week. That's going to do it for today's outlook. As always, like we always say, make a plan, trade that plan, follow those rules, and you should be A-okay. Until next time, we'll see y'all then.